I have this issue that all of a sudden people make up, and you guys are doing it now, an arbitrary number with no rooting in history or fact and say this is bad.
Hey guys, welcome back to the channel. Today we have Chamath on the In Podcast, giving us the news in stocks, economy, and the financial markets. It is incredible how much value of the global market has been destroyed in the past few months alone, and the financial system is now in danger. Chamath believes the market is going to make a hard landing, and with the severe corrections recently, we'll see that sooner than later. The correlation between the stock market and the Fed money printer is becoming more evident. Let's check out Chamath on the In Podcast as he shares his concerns about the financial imbalance and where we're headed next. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
That's not why the empire goes to ruin. We have the reserve currency of the world, and there's an enormous amount of power that comes from that position. It was 100. It's at 150. It could go to 200. Many countries operate at levels above us and still haven't imploded per se. The real thing is part of what Friedberg said is, look, if you really want to look at what we pay, today we pay $400 billion this year. That's the interest payments, okay? That's when you calculate all of the different maturities we have with all of the different coupons we have. That's what we owe today. And David is right mathematically that if interest rates go to 5% and stay there forever, but we know that that's not how economies work. They ebb and flow, okay? So the real problem that we have to understand is how do you actually create enough growth? And then the next time that we have a meaningful fall in interest rates, like every other person does, this entire world runs on the US dollar complex. Okay. Whenever we raise rates, yes, it is true that on the one hand, our interest payments go up, but proportionately and on a relative basis, one of the most important things in investing, which is appropriate here, is that people ask, what is the price of a stock? Well, before you go public, you're calculating what the intrinsic value of a company is, okay? All the things that they do, all the money that they make, here's what we think it's theoretically worth. But the minute it goes public, the intrinsic value no longer matters. It's what is it valued relative to everything else, okay? The United States is a relative, if it's a stock, if all these countries are stocks, we are valued relatively to others, not intrinsically. And the reason why we have so much power is because everybody else is actually valued relative to us. So this is why I think the right thing to look at, Jason, is the rate of change of debt to GDP for the entire G8 or G20 or the rest of the world. And what you'll see is something that goes up and to the right. Nobody in the world has been rewarded for not investing in their populations and basically borrowing from tomorrow to invest in today's human capital.
Okay, so we have a disagreement here. Friedberg, you think this is a major issue?
Yeah, because I think
you think it's manageable. Friedberg, you have the floor.
I think there's two things that are missing. One is the inflationary effect. So you look at that list of countries that are there, they're paying higher interest and they're paying in the form of inflation. So they have less that they can spend on their people. And ultimately what ends up happening, it's just simple arithmetic. It's not about relative value of a currency.
Anybody who is a president of the United States gets hold of their annual budget. It's about $5.5 trillion this year. So you're talking about interest payments that are still less than 10% of their total budget. Now that includes the entitlement payments. Okay, so about $3.5 trillion is what you have to pay for.
No, it's 20%.
Okay, so the president still has $1.5 to $2 trillion of leeway, of which a quarter are debt payments. So my perspective, quite honestly, is mathematically, there's a lot of room to run here before these things get really out of control. And even if they do, I think the relative problem is for the rest of the world will be so egregious that the ability for the United States to go to those banks and those economies and basically sell in more US debt is quite high because they cannot afford to own debt in their own country. So if you think that the United States is bad, go back to that list. Guess what? Those central banks in those countries are going to be buying US dollars faster than they can go out of style.
Our spending is 27% of GDP right now. 27%. It should be 15%. Right? So the spending
Where does that number come from? Why?
There's a bunch of economists who have shared these papers and shown
morons, fake experts, fake experts. I have this issue that all of a sudden people make up, and you guys are doing it now, an arbitrary number with no rooting in history or fact and say, this is bad. And all I'm saying is, I know it feels bad to us, and I think we would all run this country differently if we could get control of the balance sheet. I would as well. I would try to get debt way, way down. I would try to get deficits way, way down. But all I'm saying is using this justification of an arbitrary number always falls flat. So I'm encouraging us all, let's find a better model of reasoning, because every time we point to some rando's book and say 127% is bad, nobody listens. And I think the message that you should take away is it's because it's imprecise and it's not rooted in any actual logic. And if there's a better building...
The reason I believe that this is concerning is I look at the top 10 countries that have, debt ratios that seem out of whack. And I think, wow, what has their fortune been for the last 10 years vis-a-vis Japan and Venezuela?
That's not the right comparison. The right comparison would be to go back and say, look at the British Empire and what was the debt to GDP when it started to actually fall off?
Yeah,
Does anybody of us
collapsed.
know?
It collapsed.
No, I'm saying, was it triggered by debt to GDP? And I think your answer will be...
In part. They took on ruinous debt and they couldn't maintain their empire anymore and the whole thing collapsed.
I'm just asking for some numerical specificity.
All right,
does any of you have numerical specificity?
The last time
there is a lot of numerical specificity. There is a ton of work that's been done on this.
What
it's not people pulling out of their...
So
the work shows that historically the best way to manage the growth in a country is to have deficit spending be equal to or less than the growth rate of the economy of that country. If your income, the tax revenue that's being generated by the government is equal to, say, 15% of GDP, you do not want your spending to be more than 17 or 18% if the economic growth rate is 2 to 3%. That's it. If you do anything more than that,
what happens?
If you do anything more than that, you're borrowing from the future to pay for today. That's the simple truth.
Okay, so what happens?
And when you do that, the rates go up and the prices go up, and eventually your currency doesn't work anymore.
What does eventually mean?
So you're making a bet. Read the book that I talked about last year, the most recent Ray Dalio book. He goes through 6 stories with the economic data to prove it, the factual data, the history of what's happened with 6 empires over the last 500 years where this exact same scenario has played out. This isn't some random arbitrary story.
I read that book.
And everyone had the exact same perspective that you have when they were living in those days. And they said, you know what? We're going to be okay because we're the reserve currency and the world loves us and we're the empire and we have influence everywhere. And they all lost primacy and their currencies collapsed and they all broke apart. And
I'm not saying that can't happen in America. What I'm saying is you get so full-throated. I read that book. It's great narrative, but the numbers are brittle. Okay? They're fragile and they're mostly made up.
Everyone can read it and make their own opinion on that. Yeah.
So all I'm saying is in the absence of numerical specificity, I agree with you that this trend is alarming and it's bad. I agree with you. And I agree that we should spend a lot less. What I'm saying is when you say to the world, stop spending because XYZ number is bad, you have no credibility because it's something that you can actually back up. And all I'm saying is, if you could find a better logical argument, you would probably get a lot more people to, convince a lot more people.
You're just being ignorant. You're ignoring it. You're saying you don't want to actually believe it. The numbers are there.
Show me the numbers.
And I'm not saying ignorant in a disparaging way. I'm saying you're literally just ignoring the data.
Show me the numbers. Show them to me. You're so right. So why don't you just bookend the argument exactly the way you just did? My point is not that you said it just before, that we don't know at what upper bound these things break or don't break. And all I'm saying is every time you throw up a random number, you guys sound like the boy who cries wolf. Okay. And you're shouting into a vacuum. It's the advice that I'm trying to give you guys. I agree with you. I spend my entire days investing in and trying to figure out what is the risk-adjusted rate of return of the things that I'm doing. And I'm trying to tell you as somebody with some reasonable financial numeracy, every time I hear you or Ray Dalio or somebody else say, this number is where it all breaks and it doesn't, you lose a little bit of credibility. Then you go to this number and you're like, oh, at 127%.
Okay, we get your point, Chamath.
Let me put it back to you, Chamath. No, let me put it back to Chamath. Chamath, how much is too much? How much debt can we handle and how much spending as a percent of GDP should we handle? What is the limit in your mind? And how do you decide what that limit can or should be?
I think the honest answer is every time that I have been alarmed that we had hit a threshold that was meaningful. So for example, like I think under Obama, we passed 100 and it felt very scary because I was like, wow, that seems like a demarcation. It turned out to not be a demarcation at all because it's relative to every other country and what they're going through. And I understand that you don't want to believe that. If there's a different cosmos and a different planet somewhere, maybe this will all reset. But right now, it's not.
What do you guys think about Chamath's outlook for the current market? And how will this affect investor sentiment in the coming months? Comment down below. Guys, thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.